Hello friends, welcome to my channel to IGCSE Accounting tutorial. Today we are going to solve January 2007 question number 3. Let's start. T. Trout's balance sheet dated 30th November 2006 showed the working capital to be 15,000. Some of the transactions and other events occurring in December 2006 are listed below. You are required to explain briefly for each item below the effect on working capital, including the amount of increase or decrease. If you think an item did not change the working capital, state no effect and give a brief explanation. Note: you are not required to recalculate the working capital. Number 1. Goods sold for cash £6,000, markup was 50%. Number 2. Suppliers were paid 2,500 by check in full settlement of a debt of 2650. 3. Goods purchased on 1 month's credit for 1200. 4. An old vehicle, book value 5000, was sold for 2000 cash. Borrowed 10,000 from Salman Bank PLC. 3,000 is repayable in September 2007 and the remainder in December 2010. Decreased the provision for bad debts by 500. Working capital. Working capital actually means current assets minus current liabilities. Only the current assets minus only the current liabilities. No fixed assets, no capital, no long-term liabilities. Okay. If we take the previous question, January 2007 question number 2, in that question the working capital is 34784 minus 12250 equals to 22534. The working capital is 22534 in that question. If you want, you can have a look. First of all, we need to understand that assets equals to capital plus liabilities. If assets increases, debit, and when decreases, credit. If capital increases, credit, and when decreases, debit. And when liabilities increases, credit, and when decreases, debit. This is the main magic formula of accounting, the basic formula. For every transaction, first you need to classify whether it falls under assets or under liabilities or under capital, and after that the journal need to be made. Here we are going to do the same. The question: goods sold for cash 6,000, markup was 50% as said in the question. The journal for this transaction will be cash debit 6,000 and sales credit 6,000. But to decide whether the working capital has increased or decreased, we need to think differently and in depth. Goods sold for cash means increase in cash in hand or bank by 6,000. Decrease in closing stock or stock under balance sheet by 4,000. How? Let's see. The selling price of the stock is 6,000 and the markup is given, that is 50%. The formula of markup is gross profit by cost of goods sold into 100. There are more 3 formulas which I am sharing with you, that is margin. Margin equals to gross profit by sales into 100. One more, if markup is given and if you want to directly convert markup into margin, then the formula will be x divided by 100 plus x into 100. Here x is the markup value, as in this question is 50. The last one, if margin is given and if you want to directly convert margin into markup, then the formula will be x divided by 100 minus x into 100. Here x is the margin value. In this question we can't use simply the markup formula, because if we use the markup formula we will need the gross profit or the cost of goods sold, which we don't know. We know only the markup percentage, so we cannot use this formula. If we want to use the margin formula, we cannot use this too, because margin equals to gross profit by sales into 100. We only know the sales value of the stock. We don't know either the margin percentage nor the gross profit. That's why we can't use the margin formula too. We will be actually converting the markup percentage directly to margin percentage. This formula will work, because if we convert the markup percentage to margin percentage, then we will use this formula. Here, after getting the margin percentage, we know the selling price of the stock, so by using this formula we can calculate the gross profit. After calculating the gross profit, we can easily find out the cost of goods. Okay, as the selling price is given and the markup is given. So we need to convert directly to margin, because if you want to calculate the cost price of the stock which was sold, we need the selling price and gross profit. So to convert to margin, we will be using the formula 50 divided by 100 plus 50 into 100. 50 is the markup percentage. We share this formula here, x divided by 100 plus x into 100. X is the markup percentage. By using this formula, we will be converting the markup percentage directly to margin percentage. So the margin percentage is 33.33. After getting the margin percentage, we will be using this formula. Margin equals to gross profit by sales into 100. Margin is 33.33. The selling price of the goods is 6,000, and we will find the gross profit. After calculating, we will get the gross profit as 1999.8. If you round it up, the gross profit will be 2,000. The selling price of the goods is 6,000. The gross profit of that good is 2,000. The cost of the goods will be 6,000 minus 4,000 equals to 2,000. As we know, 2,000 is the gross profit, selling price is 6,000. If we back calculate, the cost price will be 4,000. After calculating the stock value, we need to understand what has increased and what has decreased in working capital. Under current assets, cash has increased by 6,000 and closing stock has also decreased by 4,000, because the cost price of the goods which was sold is 4,000. We have find it out here. So net current assets has increased by 2,000, because cash increased by 6,000 minus stock decreased by 4,000. 6,000 minus 4,000 equals to 2,000. No effect has been made in the current liability, so the working capital will increase by 2,000 net, because as I said earlier, that current asset, that is 6,000 minus 4,000 minus current liability, which is 0, equals to working capital, which is 2,000. If you have a look to this link, this entire figure is current asset and this one is current liability. Current assets 6,000 increased in cash and 4,000 decreased in stock. After deducting 4,000 from 6,000, it will be 2,000. So it has been proved that the working capital will increase only by 2,000. Clear? If you have any question, please comment in my comment box. I will try to reply. The second one is suppliers were paid 2,500 by check in full settlement of a debt 2650. The journal will be supplier debit 2650, discount received credit 150 and cash credit 2,500. Here suppliers were paid means cash was withdrawn, so cash credit, and creditors has decreased, and creditors had decreased means creditors debit by 2650 and discount was received by 150 means discount received credit by 150. Then classify which items fall under current asset and current liability. Supplier is a creditor, it falls under current liability. Discount received do not fall under current asset nor current liability, because it is PL item, profit and loss item. Clear? Cash falls under current asset. Supplier debit means current liability decreases by 2650. Cash credit means current asset decreases by 2,500. So here current asset decreases lower than the current liability, so current asset increases by 150. Here you can check current asset minus 2,500 minus current liability minus 2650 equals to working capital increase by 150. Here is the link, you can check it out. Minus 2,500 minus open bracket minus 2650 close bracket. The answer of this formula is 150. Proved. The answer of this formula is that working capital increased by 150 net. The third question was goods purchased on 1 month's credit for 1,200. The journal will be purchase debit 1,200, creditors credit 1,200. Purchase was made means stock will increase by 1,200 means current asset will increase, because it is current assets item. Creditors credit means current liability will increase by 1,200. So here is the formula: current asset plus 1,200 minus current liability plus 1,200. Working capital 0, no effect. You can check this formula: plus 1,200 minus open bracket plus 1,200 close bracket. The answer of this formula is 0. That means no effect. The fourth question was an old vehicle book value 5,000 was sold for 2,000 cash. The journal will be cash debit 2,000, old vehicle credit 5,000, loss on disposal debit 3,000. Cash debit means current asset will increase by 2,000. It is a current asset item. Old vehicle credit means fixed asset will decrease by 5,000. It is not a current asset item nor current liability item. Loss on disposal debit by 3,000 means loss will increase. It is also not a current asset item nor current liability item. So current asset will increase by 2000, so here it is, plus 2000 minus current liability. There is no effect in current liability, that's why 0. So overall effect on working capital is that it will increase by 2000. You can check it here. 2000 minus 0 equals to 2000 net increase in working capital. Proof. The fifth question was borrowed 10,000 from Salman Bank PLC. 3,000 is repayable in September 2007 and the remainder in December 2010. The journal will be cash debit by 10,000. Current liability means bank overdraft credit 3,000. It is a short-term liability, that's why it falls under current liability. As it was said in the question that 3,000 is payable in September 2007, that's why it falls under current liability. The other 7,000, it's a long-term liability, loan from bank credit. I hope you are cleared. I repeat, I have credited two liabilities. Short-term liability, that is the bank overdraft, because the date was mentioned that 3,000 is repayable in September 2007, and the other one is long-term liability because it is mentioned that the remainder amount is payable in December 2010. That's why I have used two liability option: current liability, long-term liability. Here cash debit means current asset increases by 10,000. Bank overdraft credit by 3,000 means current liability increased by 3,000. Loan from bank credit 7,000 means long-term liability increased by 7,000, and it is not a current asset item nor current liability item. So current asset plus 10,000 because cash increases by 10,000. Current liability, this one also increases by 3,000. So if you look at this Excel formula, 10,000 minus plus 3,000, it will be 7,000 net increase in working capital. Proved. The sixth question is decreased the provision for bad debts by 500. The journal will be receivables debit by 500 and provision for bad debts credit by 500. Here receivables debit by 500 means current asset will increase by 500 because it is a current asset item, and provision for bad debts credit by 500 means bad debts had decreased by 500, and it is not a current asset item nor current liability item. Okay, so finally current asset increased by 500, there is no current liability, so overall the working capital will increase by 500. If you look at this link, 500 plus 0 equals to 500 net increase in working capital. So proved. If you like my video, please share with your friends and family, like my Facebook page, subscribe my channel, and don't forget to press the bell icon so that you can receive notifications about my latest videos. Thanks for watching. Bye bye.